and members of the committee. Thank you for having me at this briefing today. I'm honored to speak with you about the functions of blockchain technology in financial services and to answer any of your questions. My name is Denelle Dixon, and I'm the CEO and the Executive Director of the Stellar Development Foundation. I've been in this role and working in blockchain for the last 16 months. Prior to that, I was the Chief Operating Officer of Mozilla, the maker of the Firefox browser, where I spent my time focusing on the intersection of business, technology, and public policy. In both of these roles, I've advocated for and highlighted the importance of privacy, net neutrality, encryption, the need for openness and interoperability in technology, and fostering competition and creativity on the web. Today, in my role at SDF, these policy issues remain an important focus, as there's a need for openness and interoperability in blockchain so that we can foster competition in our space as we did in the early days of the web. The Stellar Development Foundation is a non-stock, non-profit corporation. We have no shareholders, we have no owners, we have no profit motive. We are not a charity. We pay state and federal taxes, but our structure allows us to be beholden only to our mission, which is creating equitable access to the global financial system. We look to accomplish this mission by making money more fluid, markets more open, and people more empowered through the use of the Stellar Network. Our work at SDF is broad, and yet we are focused on this technology stack. We shepherd the code base for the Stellar Network. We support the growth of the ecosystem and the use cases built on top of Stellar, in addition to supporting public policy and education around Stellar and blockchain generally. So, what is Stellar? Stellar is an open, permissionless, decentralized ledger or blockchain network that is optimized for payments. There is no single entity, including SDF, that controls the code base of the network or its growth. You don't need permission to use the technology. It's just like the underpinnings of the internet. It's open and ready for your use. The many third parties building, innovating, and growing the network are a testament to our open source background and are the source of financial innovation and inclusion. Using Stellar makes it possible to create, send, and trade digital assets backed by nearly any form of value, and to do so in a compliant manner. The network interoperates with the traditional financial system to leverage the benefits of blockchain technology to enhance, but not supplant, existing infrastructure. The Stellar Network has been operating for over 5 years, and today, the network processes over 2.5 million daily transactions with over 4.5 million accounts. So as members of this task force have likely heard, there are countless applications for blockchain technology within the financial services sector. I want to focus my comments today on just one, and that's payments, particularly cross-border payments. The World Bank estimates global remittances totaled $714 billion in 2019. For 7 countries last year, remittance inflows accounted for more than 20% of the GDP. And according to the UN, 800 million people, that's about 1 in 9 globally, are supported by funds sent home by migrant workers. Unfortunately, remittances remain expensive and slow. According to 2019 data from the World Bank, the global average cost of sending just $200 across a national border is around 7%. So many people and economies are dependent on high-cost remittances that the UN created a sustainable development goal to reduce the per-transaction cost of remittances to less than 3% by 2030. So this is where blockchain can help. Sending any transaction across a border on Stellar, whether the value is $2, $20, $200, or $2,000, is fast. It takes less than 3 to 5 seconds on average, and it costs fractions of a cent. To give the task force a live, real-world example of how Stellar creates this equitable access to the global financial system, I'd like to focus on Nigeria. It's the 6th largest remittance market at over $24 billion annually. So Cowrie, it's a regulated FinTech company in Lagos, Nigeria, provides cross-border payment services for the Nigerian market, and that's powered by Stellar. By tokenizing the Naira and integrating with the Nigerian Interbank Payment Network, Cowrie developed payment rails that enable low-cost and instant payments into and out of Nigerian bank accounts. So their product, which is called NGNT, a digital asset that is backed one-to-one fiat Naira, is available on Stellar today for cross-border payments and digital asset exchange. Now, Cowrie plays an important role providing access to Stellar in Nigeria. But then there's another anchor, we call them anchors, these financial institutions, that's on Stellar, this one in Europe. It's a FinTech company called Tempo that issues digital assets backed one-to-one by the euro. So with Tempo and Cowrie as endpoints, Stellar enables payments between the EU and Nigeria that are completed in 3 to 5 seconds, nearly instantaneous, nearly free to the developer. And there are built-in compliance tools on Stellar that allow entities building on the network like Cowrie and Tempo to complete the Know Your Customer, the KYC, and anti-money laundering, AML steps required by their respective regions. So this generalized asset issuance toolkit that's built into Stellar includes the ability for the issuer to take in the required information before issuance or redemption of the digital asset. So it empowers them to meet their compliance obligation. This functionality is built in at the protocol level, as tokenization is a fundamental part of the network. So the supporting code is reliable, it's vetted, and it's fast. And when the digital assets work together, as they do in the Cowrie Tempo example, converting fiat in Nigeria into a digital asset, sending those assets to Europe, converting that digital asset back into fiat in Europe, and ultimately depositing that fiat into bank accounts of businesses in Europe, a connected global financial infrastructure is created. That's how interoperability comes to life. And that's what makes Stellar and blockchain a powerful technology. Remittances are a core use case for Stellar, and expanding the network of anchors, these financial institutions, building on Stellar is one of the ways we seek to create this equitable access to the global financial system. In addition to accessibility, Stellar's technology could go a long way toward achieving the UN Sustainable Development Goal. So as you consider these type of policy objectives, I want to make myself and my team available as resources to the task force. And I'd love to know how the task force members are thinking about remittances, payments, and digital assets. Thank you so much for having me here today.
Thank you, Denelle. And I can assure you that we've been looking at that issue of remittances, and on that note, I would also like to introduce our chairwoman, Maxine Waters, who I think it's fair for me to say, and she can correct me if I'm wrong, one of the most attractive parts of this whole idea of blockchain and different platforms, Ethereum and others, is that it holds the possibility of banking the unbanked. And as Neha and others have acknowledged in their remarks. So with that, I'd like to introduce our chairwoman, Maxine Waters, the gentlelady from California, for her remarks.
Thank you very much, Chairman Lynch. I'd like to thank you for holding this briefing and for your leadership of the committee's FinTech task force. Blockchain technology has great potential for innovation in financial services, and it is extremely important that this committee continues to explore the various potential benefits and risks in its use. While cryptocurrency is one of the most well-known use cases for blockchain technology, I look forward to hearing even more from this panel about other and more inclusive ways to utilize blockchain technology. I just came in on the hearing a little bit late, but I was able to hear how it is being used in Nigeria. That's very impressive. I was also able to understand how we could reduce the cost of remittances, which I think is so very important. And don't forget, in my district, that is 47% Latinx, we have remittances that are going out every day to many of the Latin countries. And so I'm very, very interested in this cryptocurrency, period, blockchain in particular. And again, I thank you, Chairman Lynch, for all of the effort that you're putting into it. You're our leader, and we're looking for you to bring this to us and help us move at the right time in the right way. Thank you so very much. I yield back.
Thank you, Madam Chair. I do appreciate it. Thank you for your keen attention to this issue for all the right reasons. So I'll begin by yielding myself a few minutes just for some initial questions, and then we'll go in order. Patrina, I think, will control the run of show in terms of who's next. But Neha, I did want to, you mentioned that you're working, that IT yourself are working with the Boston Federal Reserve, and that they are, I was happy to hear one of our previous hearings several months ago, they mentioned how their goal was developing a platform for payments within the Fed. However, I think when I asked how soon we might expect that, they told me 2025 or something like that. So it was a very long horizon. And so I'm just curious, is that still our understanding? Because, Congress is slow to begin with. We slower than the technology is changing in our world. Let's put it that way. So we struggle to keep pace, to put it kindly. What is the current prognosis in terms of where we are with the Fed in developing sort of an institutional platform that might facilitate real-time payments? Where are we on that?
Thank you, Chairman Lynch, for the question. I want to stress that I cannot speak for the Federal Reserve Bank of Boston. I do not represent them, nor the Federal Reserve System. However, as I said, I'm very honored to be doing this work with the Federal Reserve Bank of Boston. We are phrasing this currently as research. We don't believe that the technology, we have knowledge about enough knowledge about the technology yet to give any sort of firm design or firm opinion on what the technology design for a central bank digital currency or digital dollar should look like. It's also not up to us to decide whether or not we should be issuing one. That is the job of Congress. I will say that a central bank digital currency or digital dollar, should one be issued, would be critical infrastructure. It would be extraordinarily important, and it would be subject to a lot of attack by hackers and even potentially other nation states. So it's really something that we want to make sure that we get right. And that is why security and resilience are our number one priority as we engage in this research. How do we build such a system securely? And, I mentioned responsibility earlier in my remarks, and I also mentioned that we have to think carefully about incentives, and we have to think about the role of the private sector and how that will complement the role of the public sector. Unfortunately, a lot of entities in the private sector have chosen to issue tokens and do token sales. And what ends up happening is that there is a foundation or there is a company that owns a vast majority of these tokens and thus has a financial interest in their technology and in pushing their technology as a platform. So even though it's open source, there might be some interesting financial incentives at play. And I think that's part of why the Federal Reserve Bank of Boston decided to work with us at a university. And it's going to be very interesting to see how this technology develops.
Yeah, thank you very much. I appreciate that. What prompted that question was actually your comments as well as Denelle's about how Stellar is operating sort of an open source, nonpartisan, no commercial interest, that type of platform. So the subcommittee actually had the opportunity to travel to Indonesia and Singapore last year, and they have, first of all, they have a very disparate population with people living on thousands of different islands, many of them unbanked. And they also have the advantage of they don't have a legacy brick and mortar banking system that resists some of this change. So they've come up with some innovative sandbox sort of pilots that are exploring a lot of the things that we're discussing. That's why the time frame issue was, I know we're in a competition in a way. We want to get this right. You're absolutely correct in that. We want to make sure we get this thing right. And Eric Rosengren's a real resource for this committee and personally for me and for my office. So we work with the Boston Fed. So I would like to take you up on your offer of collaborating with the task force. All three of our panelists today. That would be wonderful to have your expertise. It's a full-time job keeping up with the changes in technology and trying to reconcile that the potential that we have here for progress, but including banking the unbanked, but also realizing that we have a lot at stake because we have a financial system that has a lot of integrity. We're the model for the world, and we seem to be getting a lot of stuff right now. But this is a time of enormous change. This is a moment of great consequence in terms of where we go next with this technology. So we would be blessed if we had your expertise, that of MIT. We had actually planned a FinTech boot camp at MIT, but because of the pandemic, that got pulled down. But hopefully, if we get a vaccine next year, we'll renew that effort, and hopefully we'll be able to collaborate in person. So I'm going to yield. I've taken more time than I intended to. I do know that a couple of our members have expressed the need to go to other hearings. So I'll leave that up to Patrina to call the order of show here and introduce the next speaker. Thank you.
Thank you, Mr. Lynch. Mr. Davidson, I will now go to you if you have any questions.
Yeah, thank you so much. And I'm just euphoric that we're having this meeting. Wish we would have known a little further in advance, but I'm grateful. And to the committee and to Mr. Lynch, thanks for putting it together. To the panel, I'm impressed with your backgrounds and the quality of work. And frankly, it gives us a good chance to illustrate, one, the payment systems and, not inherently currency as a piece of this. But a lot of times this space is completely conflated with Bitcoin, and the use cases are as infinite as the use cases for the internet. And so with the credentials here on cybersecurity, for example, could get at some of that. And frankly, the decentralized platform that Stellar's working to build can illustrate some things. And this is why this is really not a partisan topic. The Token Taxonomy Act, which we put together in this collaborative way from a meeting back in September of 18 in the Library of Congress, has people as diverse as Scott Perry and myself as conservatives, to Tulsi Gabbard and Eric Swalwell on the other side. This is where Women in Color and Blockchain have hosted numerous events and invited me to speak. Darren Soto, and now a member of the Energy and Commerce Committee, and I introduced this bill. And I think one of the key things that we need to do is to provide some legislative clarity so that the innovation continues to happen in the United States. So, Denelle, I would be curious if you could address some of the barriers to raising capital in the United States, where if you saw Unicorn just had a $6.1 million judgment because they did an ICO, launched a coin, and they did it in a way that, frankly, even under our bill wouldn't qualify. They couldn't skirt securities law if our bill had passed. They did it in a speculative way to raise money to create something that wasn't yet in existence. It would inherently look a lot like an investment contract, and that's what the SEC decided. So I think there's a fear that if we provide any kind of legislative certainty, it's going to open Pandora's box and all this bad things happening. The reality is the fraud that's taken place in some cases could be made better by legislative certainty. So could you speak to that?
Yeah. Thank you so much. I think that this is an issue with respect to clarity on the securities classification. I think it only helps with respect to this market, and it only helps with respect to the new players that are coming to it. We didn't do that. That's not how Stellar came to life. That's not We didn't have an ICO. We don't have any of those things. Again, the profit motive is very different with us, but there are really exciting players that are coming onto the market, and there's a lot of fear with respect to classification issues. And so we are losing some innovation because of that fear. And I think that creating some stability around these issues and clarifying the issues would make it so that there are bright lines and there are rules that players can know that they need to follow as they enter this environment. So I think in general, this is just a really nice step to take.
Yeah, thanks for that. And kudos, you definitely have a clearly different organization structure. And I think it bypassed all that. So it's really exciting, and it highlights the ability to do things with blockchain and payments and the speed. I love that you highlighted how much more efficient this is than our current architecture. And, as is recognized, we have large incumbents with huge stakes in seeing the status quo preserved. But a key part of this is, technology does disrupt things. And a key part of it is, are we going to use this financial system and whether it's securities law or, Federal Reserve regulation or our whole banking system as a system of control, or are we going to use it as a system of empowerment? Are we going to use money as a tool or as a system for trade and commerce? Or are we going to use it as a system of control? And so as China moves forward, they're clearly using it as a system of control. And the United States, in our free and open society, we really have the possibility to do this in a way that has less central control, but actually more secure. So Neha, I was just curious if you could talk about true distributed ledger technology and maybe how Bitcoin, as an example, goes about security versus something with a traditional relational database or something like SQL database would go about security, and how much more secure is that versus, a fixed point security system?
Thank you for the question, Mr. Davidson. I want to stress that I've worked in databases and distributed systems for over a decade now. So this is an area that I'm pretty familiar with. And when I first learned how Bitcoin worked, and I want to stress, I'm going to use Bitcoin as an example, but it's, we're talking about the technology more broadly than Bitcoin. So, but when I first learned how it worked, it was really a revolution in the design of secure distributed systems. It was a very different way of designing these systems securely. So the way that blockchain-based systems are designed, the ones that have a decentralized network, is that they are built so that almost anyone can join the network. Normally, when securing a system, we put a fence around it. We try to keep the bad guys out. These systems actually expect that the bad guys might get in. They welcome it from the beginning, but they are designed in such a way that using cryptography, using digital signatures and hash functions and very importantly designed consensus algorithms, the bad guys never can get a foothold and they can't really affect the users as much. So it's really a very novel way of designing a distributed system. Now, I don't want to paint this technology like magic. There are certainly assumptions, there are certainly things that could go wrong, but I will say it is very much a novel way to design these systems. I think that we can learn a lot by what has and has not worked in what I call the Wild West of the cryptocurrency world. That has been a giant laboratory where we've been able to see a lot of these designs play out. And so we have the opportunity now to pick and choose the best of that to create secure, open systems.
Thanks so much. I could talk to you the whole panel for probably an unlimited amount of time. My time is not unlimited, and thanks for the generosity. It's gone over a bit, so thanks a lot. Really appreciate the committee again and the expertise of our witnesses and guests. Thanks very much.
Thank you, Mr. Davidson. I'll now go to Ms. Waters for her questions.
Thank you very much. I had not anticipated, raising many questions, but basically listening. But since I've been listening, I think I have been motivated to find out a little bit more. So for Ms. Narula, some experts claim blockchain technology used for distributed ledgers is revolutionary. Others claim its application is only muted and most successes will be incremental over a number of years. Given that, What's your assessment of the current legal and regulatory framework with respect to the use of blockchain in securities trading? What should Congress be focused on in terms of improving that framework to ensure appropriate safeguards are in place?
Thank you for the question, Chairwoman Waters. I'm a computer scientist. I'm not a lawyer, but so please take my comments in that context. I think that it's important to consider what should be done in the short term versus the long term. And again, I'll stress this technology still has quite a while to play out. I think in the short term, probably my fellow panelists could give more insight into the issues that the private sector and businesses are struggling with respect to clarity. I will say that it is very important to enforce our existing securities laws and that they are still applicable and that there are reasons why they exist. And this technology does not circumvent the need for those laws. So I'm a firm believer that we should enforce our existing securities laws. In terms of the long term, I think that there really is an opportunity to rethink quite a swath of our financial regulation, which is a daunting task and must be broken down appropriately. In particular, quite a bit of our financial regulation is based on the idea that there is an intermediary. There is an institution which sits between two consumers and a consumer and a business who mediates those actions, whether it is by holding funds in escrow or by facilitating an exchange or some other sort of financial transaction. This technology enables us to build these types of transactions without an intermediary. Given that that's the case, we will end up having to rethink how some of our financial regulations operate in order to work in this new context. I think there's really an opportunity here to step back and take a look at our public policy goals, what we're trying to achieve, and considering the new technology, which honestly isn't just blockchain technology. There's been digitization in the financial industry happening for the last few decades. Previously, it would have been impossible to do for a bank to store millions of transactions on paper, but now it's quite fast on a computer system. So there really is an opportunity here to rethink some of that. Thank you.
Thank you.
We see a lot of great innovation and competition with respect to this. We're already seeing what we call those who analyze the chain. So chain analysis is one of them. Elliptic is another one. Elliptic does that for Stellar. And they can actually pull out this kind of information from the chain as the transactions are going. And I just have to say one other thing. I think wash trading is not always detectable, but there's definitely litigation around this already in blockchain when you do have wash trading that happens, because you can watch the transactions and see what's happening and why the transactions may have taken place. So yes, there's a lot of innovation here, and I think they'll continue to be. The beauty of it happening in the private sector is that there's going to be competition, and competition breeds even better innovation and creativity with respect to these issues. And so I'd love to see these third parties out there doing this in the private sector.
Have any of these succeeded?